Today's financial advice is sponsored by Endeavor Private Wealth. We're back with Chris McGee, managing partner with Endeavor Private Wealth. Chris, good morning.
Good morning.
Now, the stock market has had a pretty good year this year, but there has been quite a bit of volatility, even just since the last time that we met. Do you have a crystal ball? Can you look into it and kind of share your forecast as to what investors should expect going into the next year?
Erin, it's always good to join you and your viewing audience. But as for some kind of crystal ball and market prediction, absolutely not.
Oh, man. Why not?
Well, there's a lot of issues associated with the accuracy and reliability of making a crystal ball market prediction. And that's what I'd like to talk to you about.
All right, by all means.
Well, you can use kind of this supercomputer to help find and seek out different patterns that are associated with the markets, but they may or may not be of much value to you. And then when it comes to forecasters, there's kind of two different theories behind it. One is going to typically go with the consensus view, play it safe. I guess if they're wrong, they'll have plenty of company.
Yeah.
But then the other tries to go for such extreme forecasts that, you know, hoping to seek out accolades if they would by chance be right. And that's pretty hard to follow.
Oh, I bet. Well, you are on a roll, so please tell us more.
So when it comes to that, I find that maybe I'm a little jealous of the forecasters because they tend to be great storytellers and have this overconfidence in what they're talking about. But I think it'd be more interesting if they would be accompanied by kind of their batting average or actually how often they're correct.
Well, isn't having some confidence, in your opinion, a good thing?
Sure. Confidence is great. What I'm speaking of is the overconfidence in your predictions and maybe manipulating the information to fit what you're trying to create your forecast to be. I don't know if you remember Paul Harvey, the radio talk show, but he had a line in there that said, in a moment, the rest of the story. And that's what I want to know, is that the forecaster is taking into account the rest of the story and all the applicable information in their forecast.
Well, Chris, you also mentioned being concerned about supercomputing, but isn't that a good thing?
Well, it can be, but you also need to take it into account of how reliable it is.
Okay.
So there's a really famous study that talks about the price of butter in Bangladesh.
Oh, my goodness.
Or another one that takes into account the number of sheep raised on U.S. farms as being a predictor of the S&P 500's performance. Now, how could you argue with that data?
So is that really what the study found?
It is.
Wow.
But I don't think you can cite correlation, the relationship between two items, price of butter in Bangladesh and the performance of the S&P, necessarily as causation, which is really what causes the market to go up or down and is much more complex.
Well, Chris, we are just about out of time, and I'm sure there is a lot more to discuss on this very topic, but any last words of advice for our viewers? Well,
forecasting is hard. It's not easy, and being overconfident can almost be as harmful as lacking confidence on these matters. But we believe that it's, when it comes to forecasting, it takes into account what you're trying to forecast, how far out you're trying to forecast, and then what data points are you including or maybe excluding from your forecast. We find that it's critical to have a prudent process and take into account your strengths and weaknesses in the situation and what you're measuring, and then to be able to assign a probability to that forecast and kind of the likelihood of how much somebody will achieve their goals and objectives when it comes to their financial plan.
All right, Chris, as always, we appreciate your time. Thanks for stopping by this morning. And to learn more about Endeavor Private Wealth, you can visit endeavorpw.com.